Welcome back. Tropical Storm Barry. The storm headed toward Louisiana, affecting oil production in the Gulf of Mexico. Some drillers shutting down rigs. Joining us right now is Mizuho Americas Director of Energy Futures, Bob Yawger. And Bob, it's good to have you on the show today. Thanks so much for joining us. From what you know now, what kind of disruption do you think this causes in terms of oil supply coming out of the U.S.?
Well, there is 50% of production shut down in the Gulf right now. Gulf production is about 17% of total U.S. production. But this is really going to be a flooding event. So the refineries are at risk here. Louisiana has about 4 million barrels per day of refining capacity. 3 of the top 10 largest refineries in the United States are in Louisiana. There is the risk right there. And gasoline is the risk. Gasoline is already at a shortage here in the United States. We had a large refinery here in the East Coast go down recently, and the price of gasoline relative to crude oil rallied significantly as a result of that, and it's in danger of rallying further if there's any damage in the Gulf.
Bob, what about have the refineries really improved their ability and their backup system, ability to operate or get back up after these storms? Because I think it was Hurricane Katrina and Rita that knocked out so much of the refining capacity for literally, I think in some cases, weeks, because they couldn't deal with the water and get the power back on.
Yes, it's they have, and they are an engineering marvel, the refineries. I mean, it's a kind of a simple engineering chemistry project kind of at the end of the day on a grand scale, but you can only take so much of surge, of wind. In this case, it's going to be storm surge. And if you flood out, it is what it is. You know, it's hard to stop that. It's hard to deal with Mother Nature on that scale.
When you think about it, we always thought that every time oil prices spike or gasoline prices spike, that's a terrible thing for the American economy. But things have kind of switched. Now we're a net exporter. When prices go up, how does that equation now work? Well, it's an interesting situation here because demand is going to get hurt here also. Nobody's going to be driving in the Gulf Coast area, and there's a significant population there. So while supply is going to get hurt, which would tend to drive up prices, demand is also going to get hurt. Also, we become an export economy here. The exports leave through the Gulf. The Gulf is where the storm is at. Exports are going to struggle to get out to the customer at this point, so there's going to be some consequences from that.
You know, and you make the point that it's going to hit demand. It could also hit overall GDP. There could be a little hiccup here on some of the growth metrics, and I've seen companies actually report when there's storms like this, they actually have some issues. I guess one question is, you talk about how we're a net exporter, and a big part of that is natural gas now. Natural gas has been very depressed. Could we see some disruption here in some of the LNG exporting that goes on?
In the short term, yes, there's no doubt. Everything that leaves the Gulf is going to be disrupted here for a couple of days. And it's going to skew all the numbers, especially in the weekly EIA energy report. They're going to be hard to figure out. I submit my numbers to all the agencies every week, and it's going to be a doozy moving forward from here. It's going to be complicated. But, yes, I was surprised this morning. Natural gas was actually lower this morning, and I guess that implies that the storm is out of the natural gas production patch here, and that will start to come back sooner rather than later, probably a little bit sooner than people were figuring yesterday.
So knowing the supply situation we've got right now, is oil priced right, do you think? I mean, what are you expecting in terms of the price of oil this year?
Well, my target really here in the near term is 62.50. There's a beautiful trend line there. We have some tailwinds here that should support mainly gasoline. When gasoline is at a shortage, we're about 10 million barrels behind last year in gasoline storage. You have to blend more gasoline. You need crude oil to make gasoline. That's a very healthy situation. Of course, you have a big draw in storage in crude oil this week. We've had draws for the last 4 weeks. You have the Iranian situation. So we do have some tailwinds. Plus, we have basically a weak dollar developing here also. The weaker the dollar goes, the more dollars you need to buy crude oil, so the crude oil price basically rallies. There's a reverse correlation there. So you do have some nice tailwinds here. 62.50 would be my immediate target. I think that's getting a little toppy, though. That's where we start to run out of momentum.
Because we're not too far at $60 right now.
We're not too far.
Yeah. Bob, it's great to have you on the show.
Thank you.
Thanks so much. Bob Yawger joining us there.